Today we have Mr. Rajendra Prasad, 2 decades of experience in stock markets, and also he advises few HNIs and also his friends and family. Hello Rajendra Prasad sir, welcome to our studio.
Thank you, sir. Thank you for having me here.
With the present market scenario globally, with your experience, can you tell me where we are actually heading?
So I'll start off with a Warren Buffett quote. He said, nothing sedates rationality more than large doses of effortless money.
So in last 2 quarters, actually we have seen a different environment actually. First quarter is completely in the negative thing. Now it is going up. But how you are bearish on this?
If you see the business cycle, the bonds always turn up first, and then stocks, and then commodities.
A normal people will not consider the ball lead how the bonds are performing.
Maybe you're talking about.
What about the GSTs?
So the GST 2 came in September 2025.
What actually you learned from your gurus and what are the lessons you learned from the other traders and investors?
So the first lesson is, if you think you are over smart and if you act accordingly, then there will be consequences.
Hello traders and investors, welcome to stocklivtv. Today we have Mr. Rajendra Prasad as our guest in our studio. So who has almost 2 decades of experience in stock markets, and also he advises few HNIs and also his friends and family. So let us discuss with him and gain some insights from his knowledge. Also let us discuss about the current market conditions and globally as well as Indian markets as well. Hello Rajendra Prasad sir, welcome to our studio.
Thank you, sir. Thank you for having me here.
So today we want to gain some knowledge from you. Please introduce yourself to our viewers.
I am Rajendra Prasad. I have been in markets for, as you mentioned, last 2 decades and all. So I would like to share some whatever I learned from markets. I'll be happy to share.
So in the current market scenario globally, so many things are happening and it's so volatile and so dynamic. So with your experience, please advise something on this.
We have seen an inverted yield curve since last year in US, which is the shorter term bond yield more than the longer term bond yield. And the difference between the 10-year and the 3-month treasury turns negative. Right now the ratio is at 0.12.
Okay.
And we also have the S&P 500 market cap to GDP touching 221%, which is overvalued according to Warren Buffett.
Oh.
By any means, for that matter, because 100 itself is overvalued. So he says again, I quote him again, you have to be greedy when others are fearful and fearful when others are greedy.
Right.
So now the greed is at its pinnacle. So it is obvious, it is a screaming sell.
Okay.
As far as the US is concerned and globally as well. And we also have, as far as Japan is concerned, the index Nikkei 225 has touched 50,000 for the first time. And in spite of the last decade, what we have seen from in the 80s and 90s, now the index has touched 50,000 and it is at all-time high.
Okay.
And you take India, the price earnings multiple is at 22. And if I take the inverse of it, which is the earnings yield, which earnings yield comes at 4.5% compared to the bond yield on 10-year paper at 6.5%.
Oh.
Which means the bonds are more attractive than equities. And the dividend yield at 1.32% also is less than the median, historical median. Both price to book and price to earnings are greater than the historical median. So this is clearly indicating a global equity meltdown. As I see it, maybe a 40 to 50% market fall.
So in last 2 quarters, actually we have seen a different environment actually. First quarter is completely in the negative thing. Now it is going up. But how you are bearish on this? Because you have you are taking bond as a yardstick actually.
So as there is a book by John J. Murphy, Intermarket Analysis. So according to him, he says that the bonds always turn up first, and then stocks, and then commodities. And when during a recession, all the three go down together.
Okay. Together.
Okay. Yes.
Okay.
So right now, I think it's a 6-stage cycle. Right now, I believe it is the 4th stage.
Okay.
So I see a bubble in gold as well because of that business cycle heading towards the 6th cycle.
So normally for an investor or a trader, so they will check the Sensex, what is the Sensex today, or the Nifty 50, or the, like you said, S&P 500. A normal people will not consider the ball lead how the bonds are performing. So there is a new perspective actually for few people actually.
Maybe you are talking about the recent investors, but those who are seasoned and in the market for a few years, definitely they see all the parameters.
So almost 80% of new investors only.
Yes, sir. So post-COVID, there have been addition of many demat accounts.
Right.
So that may be the reason.
Okay. That's rightly put, sir. So just considering the Indian scenario now, so there is a GST 2.0 and RBI monetary policy is unpredictable. now, as of now. So how you will look into this?
So both I see central banks of the most of the global economies, they have started to cut rates. So if the Fed cuts rates, we have to follow suit.
Correct.
So what happens is the money moves from lower interest rate economies to higher interest rate economies. If they don't do that, the currency will fluctuate more than what is actually desired.
And what about the GSTs?
So the GST 2 came in September 2025. So most of the some of the sectors like auto, essentials sectors have been the rates have been rationalized and with it into a two slab system, 12% and 5%. And as far as you have the alcohol stocks or sin stocks, the GST has been levied at a very hefty rate, so 40%, I think.
So how the markets will look into this? Because see, at one point of time, it actually rationalizing few commodities. At the same time, like you said, sin goods are at 40% rate. Even the luxury car also at 40% right now. How this will boost the economy?
So the GST collections have been good. If you see that if it has been more than 1.5 lakh crore last few figures we have seen, they have been consistently over that mark.
As an investor, if you can see in the Indian equities, there is lot of volatility due to Trump trade wars. We can call it as Trump trade wars. So, as an investor, so how you will suggest or you will advise what to take care of and where we need to be take a step back or we need to bullish on?
So as far as the trade wars are concerned, recent because of the Russia-Ukraine war, he has imposed sanction on Russian companies, Rosneft and Lukoil, I think, from which our refiners buy most of the oil, 80% imports, I think. So that will be impacted, the imports from Russia. And we are I think we are importing around 130 billion of crude from total global imports, out of which 51 billion is from Russia.
So we may import from US as well.
Yes, we are already importing from
Already
US.
importing, that will go
The
up.
percentage will go up.
Will go up. So it's just like a game. We are just moving from one country to another country. So as an investor, should I actually bullish on this or should I take back any step?
So we don't go by what Trump says, because every second day he changes his opinion on his tweet.
Yeah, yeah.
So to trade or invest based on his opinion is not a wise decision. You just go out by the broad macro picture, big picture. You see the big picture, and then you can always have a bottom up approach where there are stock specific pockets of value or sectors where already which have thrown some multi baggers, and among those which is the likely stock, micro cap or small cap, because that's where you have the maximum returns,
Exactly.
though there is risk.
Right.
But for 10%, 15% return, you need not go to stock market.
As an advisor, you might have advised many people, like all these HNIs or whatever, whoever your clients are. So, what actually you learned from your gurus and what are the lessons you learned from the other traders or investors?
So the first lesson is that don't think you are a master, you are still a student, even after 2 decades or 3 decades of experience.
True.
That is the lesson. Even Mr. Rakesh Junjanwala, that's what he used to say.
Right.
Markets are supreme. If you think you are over smart and if you act accordingly, then there will be consequences.
Yes, exactly. Because
So if I have to come back to your question, one of the legendary traders, I'll start off with a trader. There is a book on him, Reminiscences of a Stock Operator, by Edwin Lefray. It is a story about Jesse Livermore. He was a trader during the Great Depression. He made millions those days. And those days there were, I think, bucket shops instead of stock exchanges.
okay.
Or I think Dow Jones was in existence, of course. So he always said the trend is your friend. Go in the direction of the broad trend. Don't go against the trend, and have a stop loss mechanism. And if you are incurring losses, he did something called pyramiding.
Okay.
So pyramiding.
Okay.
So he would not put all the money. He would not go all in at once. So once his idea got confirmed by the stock price movement, then he would add more to that position. So in that way, he built the pyramid.
Okay. Great.
So that was the lesson. Many people. He's a legendary trader. Many people learned from him. and it is a different thing that he committed suicide later. And we also have learned lessons. There are many, there is a Ray Dalio who compounded at a very high rate, maybe 30-40% CAGR. So he always talks about all-weather portfolio, 40% in stocks, 30% in bonds, so on. So a diversified portfolio, and a diversified basket of uncorrelated income streams, so which are not correlated. So say there is a auto stock, there is a sector, and we buy something else in the basket of your portfolio which is not related or correlated to that, or where the correlation is very low. So create a basket of those kind of stocks, what he calls as all-weather portfolio. And then there is Peter Lynch. So he also compounded at 28% CAGR or something. So he always said, use buy what you see in your daily lives, whatever you see. If you witness a trend, a change in trend, then that is where you put your money.
Exactly.
So you'll be surprised to know. Let us discuss about Warren Buffett. So the legendary investor himself. So he used to say, invest in what you know. So what he called a circle of competence. So if you invest in something that is fancy or something which you don't understand, it is of course rather better that you invest in a sector or a stock you understand thoroughly. So that's where your circle of competence lies. Don't go outside it. And he has many beautiful quotes we can learn from. And you'll be surprised to know that his wealth at uh, post 50 was only 1 billion or something. But now at 94, his wealth is 200 billion. So most of his money he made after the 50.
After 50 only.
So which means that there is a saying that your first billion is the most difficult thing to do. Thereafter it becomes easy. So 90% of his wealth was made post 40, 50 years of age. That is because the years of experience you have spent learning from those mistakes, that comes into play. And we can also discuss about Shankar Sharma sir. He also talks about my guru.
Yeah, your guru.
He is the first one to spot a bear market. So that the signs of a typical bull market peak are very clear,
Okay.
or a bear market bottom are clear. It is easier to spot a bull market peak rather than a bear market bottom.
Exactly.
So if you see the bull market peaks, even the panwala starts giving you a tip. Everybody is talking about stock markets. People are buying at any valuation.
Yeah, last year we have witnessed this.
Yes, sir. So, and if you have seen, there is a famous story about John F. Kennedy Jr. So he went to a shoe shine boy to get his shoes polished. So the guy, the shoe polish fellow, gave him a stock tip.
Okay.
Immediately he called his broker and sold all his stocks
Yeah, that's a classic example.
of bull market peak.
Bull market peak, yes.
So those kind of signs are evident now. The reason why I am bearish.
So,
and if you see a bear market bottom,
okay.
so there will be capitulation. Nobody is interested in
Nobody-
markets.
Yeah.
And I forgot to mention Rakesh Junjunwala sir. So he always spoke about three things. The way he identified Titan. In 92 he bought and held for his lifetime. And he said that the way he identified Titan was there was tectonic shift from non-branded to branded jewelry. That was the story of Titan. So that's why he invested in Titan. And the business should be scalable, sustainable, and he always spoke about management quality, the most important thing.
People actually ignore all these points. They see if there is a uptick, then they will invest there. If there is a downward trend, then immediately they will sell off all these holdings and they panic. Actually, that is what is happening last 1.5 years.
I think traders generally do the opposite.
Traders will do the opposite.
Even investors sometimes, because if what I have seen is, even Rakesh Junjunwala sir used to say, buy what is going up, sell what is going down. So the trend is your friend.
The panic factor and where to hold and where to emotional control.
So
those are also important.
Yes, sir. So there has to be a allocation to your portfolio from so he had two brains, the brain of an investor and the brain of a trader. He separated the both. Once you mix both, then you will have very bad results.
Yeah. So moving on to the sector updates also, sir. There are many emerging sectors are coming up. Like last decade, we haven't seen these kind of sectors like EV, AI, or this best BESS is also coming up. So there is a sector shift also. There is new sectors are adding up. So as an advisor, so what is your take on this?
The sector rotation always happens, as we have seen. That is due to change in government policy or technology changes and so many other things. But if you see the AI, I think there is a bubble in AI. If you see the Nvidia valuation at $4.4 trillion, it is equal to the GDP of India.
India, yeah, correct.
It is a crazy valuation. So if you think that to justify its valuation, I think it is impossible. So it has to correct at least by 40-50% to be reasonable, or to come to a reasonable valuation.
Okay.
So I think even in India, it has caught up with that, because Nvidia has gone to 4.4 trillion. Anything with an AI, like we have seen in the 2000 .com bubble, people bought every sundry stock at any valuation, 100, 200 PE. They were ready to give that multiple just because it had a .com. Similarly, now I see that kind of trend in AI stocks.
Exactly.
I'm not against AI stocks, but not at this price.
Yeah. So how do you look at which sector will outperform and which will be underperform in next 12 months?
I look at more stock-specific stories rather than sectors.
Okay.
But I'll still answer that question.
Okay.
So the stock-specific ideas, which are niche businesses, unique businesses with no listed peers, those kind of businesses. But if you ask me sectors, I think defense will do well, though it has run up quite a bit.
Still, you believe defense will go up?
Yes, sir, because if you see the budget allocation in 2025, it is, I think, at 13%, and growing at from 24 budget has grown at almost 9% or something. And we will see that defense outlay increasing every year on year. And I also like recycling stocks, waste management stocks, water treatment, those kind of stocks. There are some interesting stocks there.
Okay. So apart from this water management, all this energy sector and all, so infrastructure sector is also actually is at a flat. It is not moving greatly, but how, because you are bearish, so I just want to ask you this question. So what is your take on infrastructure sector as well?
Infrastructure, actually, the weightage in the Nifty is very negligible. So it should have been much bigger than what it is now. The highest weightage is, I think, financial services, IT, and pharma.
So which stock you will pick, a pharma stock or a infrastructure stock?
I will pick a pharma stock, but pharma is a very different sector, because each stock is different. There are CDMO stories, there are the formulations, APIs, and
R&D as well.
Yes, sir.
Okay. Lastly, sir, one final valuable advice for all the traders and investors.
I'll borrow generously from Rakesh Junjunwala, sir.
Okay.
He said, believe in the India story.
Okay.
It is intact. It is still intact. Though you will not see the kind of bull market we have seen from 2003 to 2007 in our lifetime. Correct. But there is money to be made. So invest and compound your money, because Einstein said, compounding is the eighth wonder in the world. And you can, if you want to trade, you can maybe allocate 10% or 5% of your portfolio to trading, as trading is time bound, whereas investment is not.
That's a great advice, sir. So thank you so much for being with us, and we are expecting more stories to listen from you, and we will continue this series.
Definitely, sir.
Thanks for your valuable time, sir.
Thank you, sir.
Hope you have gained valuable knowledge and insights from Mr. Rajendra Prasad. We are planning to do more videos with him as well. Also, we are inviting more analysts to enrich your investment journey. Keep watching Stock Live TV and share this video and subscribe to our channel.